Global PMIs offer hope for an earlier US rate cut and show the ECB is on track for June and the Bank of England for August. Australia's CPI is set to keep easing today, and Indonesia should hold rates. But currency volatility means a hike is not off the table. That's coming up in our 5 Things in 5 Minutes. And then in part 2 of our bonus deep dive interview on Australian housing with ANZ Group Chief Economist Richard Yetsenga, he offers up some pragmatic suggestions for improving affordability.
Let's start ruling everything in and just work out where we can have some impact today, not in 20 years or 25 years, but this is a challenge that demands more urgent and I think broader action.
But first, in 5 and 5 with ANZ, weaker than expected factory activity data in the US overnight has given some support to hopes for a mid-year rate cut from the US Federal Reserve. Treasury yields were down about 4 basis points at 4 a.m. Sydney-Melbourne time after the S&P's flash PMI for the US expanded in April at its slowest pace this year as employment and orders contracted. Meanwhile, the ECB looks on track to cut rates in June, as an improvement in Europe's PMI is off the back of below potential growth. ANZ economist Bansi Matavani says in the UK, services activity expanded at its fastest pace since mid-2023, meaning the Bank of England may wait longer to see services inflation fall. Markets are pricing in an August cut for the Bank of England. In the US, Wall Street rallied, with the S&P 500 up 1.3% and the Nasdaq up 1.8%, supported by those lower US Treasury yields. Oil was back up 1.2% on loosening US monetary policy expectations. Here's Bansi.
The PMI data also pointed to easing price pressures, with both goods and services pricing rising at a slower pace. Now, the overall data led to a reassessment of strength in US's economic activity and raised question about higher, but for how much longer. Following the data, market pricing for July rate cut moved to 53% versus 43% before the release.
Number 2, the Aussie dollar was up 0.6% at 64.90 US cents, while the Kiwi was up 0.4% at 59.41 as the US dollar weakened. Key for these currencies today is Australia's March quarter CPI data, which is being watched for sticky domestic and services inflation. ANZ senior economist Catherine Birch is forecasting annual CPI to fall to 3.5% from 4.1%.
Our forecast appears broadly in line with the RBA's February forecast for headline CPI, but it might be a little higher than its forecast for trimmed mean. We know in the past that the RBA has shown little tolerance for inflation exceeding its forecasts, and we certainly saw that evident in the November 2023 cash rate hike. But we don't think that it just being marginally higher will be enough for the RBA to do an about turn and consider a hike option at the May meeting, particularly given they just took it off the table in their previous meeting in April.
Number 3, Singapore's annual inflation was weaker than expected in March, falling from 3.4% to 2.7%. Core inflation fell 0.5% to 3.1%. ANZ Head of Asia Research, Koon Goh, says food prices saw their first month-on-month fall in 3 years, while there was also unseasonal drops in clothing and footwear.
While the MES would be pleased with these results, I think it's still too early to conclude that we are starting to see inflation pressures ease. Core inflation is still above long-term average and could stay elevated still in the coming months. For now, I anticipate the MES to keep policy unchanged, and I'm not expecting easings for the rest of this year.
Number 4, the Bank of Indonesia is expected to hold its key policy rate at 6% when it meets later today. However, ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, says the recent currency volatility means a hike is not off the table.
We did see it last year in October, and there is a possibility it may happen. I guess the differentiating factor this time is that it's not just the Indonesian rupiah that's weak, but we are seeing broad-based weakness across currencies. And to that extent, BI may actually restrain on doing anything.
Number 5, the market consensus forecast for South Korea's March quarter GDP is for growth of 2.6%, up from 2.2% in December. ANZ economist Crystal Tan is forecasting 2.4% and says strong chip exports look set to counter sluggish domestic retail sales.
In the near term, it's really going to be the export sector that is going to be the key growth engine. That's thanks to a buoyant chip sector. If we look at the trade data in the first 20 days of April, that continued to point to strong chip demand.
Crystal Tan there. Now, in part 2 of our bonus deep dive interview on Australian housing affordability with ANZ Group Chief Economist Richard Yetsenga, he looks at a few ideas, other than just increasing supply.
What might we look at? Lots of economies have different approaches to non-resident access to the housing market. Australia's been gradually building in a different approach, but we could look more carefully at that. In years, we've seen shifts of effectively the housing stock out of the residential market into the holiday market. What impacts has that had, and are we happy with the social implications of that? We know there are vacant homes in Australia. What's the scale of that, and is that something that could be more amenable to a more significant policy focus? Every economist, I think, if I can speak for them all, will argue that the way Australia taxes land or home transactions rather than homes in an annual sense, so kind of stamp duty, which is a one-off when you shift, rather than land tax, which occurs every year, is limiting choice because the rates of stamp duty must naturally be much higher than the rates of land tax. Australia, in a broad international sense, has typically had a rental regime that's probably more favours landlords rather than tenants. Is there something to look at there? Let's start ruling everything in and just work out where we can have some impact today, not in 20 years or 25 years, but this is a challenge that demands more urgent and I think broader action.
You mentioned that redistributional policies by nature involve complex trade-offs, which is true, particularly in a political economy sense. One of the reasons things get ruled out is that the political heat is seen as too hot. Things have a third rail nature to them. What are the sorts of things that are a bit hot, which maybe should be included in the let's look at it basket rather than the let's not?
Well, even these third rail issues often, get repressed for a while and then come back. And it's not, of course, we should acknowledge the political realities, and the political realities often camouflage the fact they're social realities as well. The politics is difficult because there's not agreement in the community about these things. So we certainly shouldn't be blaming political leaders for how complex this is, but the economics gets used as well. As an economist, I'm not a particular fan of rental caps as a permanent feature of the market. But if we have a crisis and there are areas where people are struggling to get housed, I care about homelessness a lot more than I care about obeying the laws of supply and demand. And so might there be circumstances in which judiciously applied rental caps that have a finite shelf life can do some good? Why shouldn't we look at those? Why would we just rule them out because they offend our sense of supply and demand?
And one of the pressures at the moment is around population. How important is a population strategy in addressing housing?
I don't think there's any question that migration's had an enormous benefit for the Australian economy in lots of ways, economic as well as social and cultural, but we also shouldn't pretend that there's not an adjustment task required when you pursue large-scale migration. And, of course, the last 5 years has been very unusual, 2 or 3 years of very, very low migration, and then the last year or two of extremely rapid migration. It shouldn't be a surprise that this bulge of migration has compressed some of the adjustment challenges into a smaller period, and perhaps they're manifesting themselves. So I don't know that we should take the last 2 years as the normal migration story, but we should definitely be thinking about the intersection of migration and housing and how do we get those two things to coexist as best as we can.
Richard Yetsenga there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, April the 24th. We'll be on air on Friday, April the 26th, following Anzac Day in Australia and New Zealand on Thursday, with reaction to Australian CPI and those all-important US GDP and core PCE readings. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.